General Electric reported an earnings beat this morning with robust demand for jet engines and power equipment. Still, the company gave a disappointing forecast for the year due to problems in its renewable energy business. BofA Securities senior multi-industrials and industrial software analyst Andrew Obin joins us now to discuss. Good to see you, Andrew. I know that renewables missed your expectations. We're seeing investors really honing in on that with the stock price here. What do you think went wrong here?
Yeah, so look, our view is that the quarter was pretty solid. GE beat the consensus on EPS and actually free cash flow. I think the debate that's taking place is really about their free cash flow forecast. GE is one of the most complex companies out there, so the big debate, the role of progress payments in terms of their free cash flow forecast. Our take is that on apples-to-apples basis, it's fairly straightforward. We do think free cash flow is quite a bit better than the street is forecasting. I would say the fly in the ointment is that operationally, the renewable business is probably not as robust as the street has expected. But really, free cash flow has been the key focus for investors for this name. They beat very nicely in the quarter, and the outlook for 2023 is also quite a bit above street's expectations. But as I said, the debate is about progress payments. If you dig in, actually, on a net basis, what you have, very strong aviation performance and solid performance in power, aided by the progress payments.
So let's dig into the aerospace, because I know you're also looking at military there for them. What do you like in this report?
Yeah, look, the big debate is that the pace of recovery in the aerospace, right? Obviously, also the supply chain has been gummed up on the commercial aerospace side. So what we're finally seeing the signs of this commercial aerospace recovery. We've been waiting for it for a couple of years, right? Investors been on and off. I think it's been a big disappointment for investors over the past couple of years. It's finally coming through. If you take a look at GE stock's performance, it's trading in line with other aerospace names. I think the big story is the recovery in Trans-Pacific travel that's probably coming throughout 2023. It's actually the biggest pool of profits for GE Aviation. So we finally started to get nice visibility into 23, and we think that explains nice stock performance year to date.
And in his commentary, Larry Culp saying, looking ahead, GE is positioned to drive growth, profit and cash, and our outlook reflects our confidence in our businesses. What do you see as some of the weaker aspects of business? I know we talked about what we're seeing with renewables. Is there anything else in terms of headwinds that you're keeping an eye on?
No, actually, I would say, look, the issue is, as I said, we are going, the aerospace industry, got rid of a lot of people during COVID, and they're finding that it's really tough to ramp up. But it's a broader industry-wide issue. So I think GE is no different from the rest of the industry, right? And obviously, as GE starts delivering engines are less profitable than services, so the mix is going to turn somewhat negative. Look, and as I said, renewables, the wind turbine business has been a big disappointment in 2022. There is a big restructuring program. It missed our expectations in the fourth quarter, offset by nice performance in their core energy business. But we think that's the source of uncertainty. And the conversations we've been having with investors today, right, is just a view that GE really sees a straight line on restructuring from now through 24. And I think there are some questions among the investors as to, how much confidence we can have in that. But, I want to say that GE is taking material amount of restructuring of this business, taking out fixed costs. IRA is a huge material help here, right? It just changes. It's a game changer for the industry for the next decade. The question is, how soon are we going to see the impact of these positive changes in 23?
And as we talk about that spin-off into healthcare, what kinds of conversations are people having? What sort of time horizon are they looking at to really see that really taking off?
For renewable turnaround?
For the healthcare, yes.
Well, healthcare has been spun out, so healthcare is no longer part of the business. So I would say the other thing that happened today is that if you look at the outlook, right, some analysts still have healthcare as part of GE. And so what's interesting is that GE reported with healthcare, but obviously going forward, the free cash flow and earnings exclude healthcare, right? It's now going to be followed by healthcare analysts. So I think this is adding to confusion today, right? Because if you look at the consensus outlook, right, if you look at people's models, people still have healthcare numbers in their model. Actually, healthcare relative to our expectations was very good. It's just the issue is that some people still have healthcare as part of ongoing operations in 23, and it's a standalone separate company. Albeit GE still owns, a nice chunk of it, which will they monetize over the next 12 months.
And that's an important distinction because a lot of people sort of, jumping into the stock and wondering and not really getting too clear on that. So thank you very much. BofA Securities Senior Multi-Industrials and Industrial Software Analyst, Andrew Obin. Thank you so much for joining me this morning.